16:09. Today is the 26th of April, Tuesday. Okay, now you're going to have to follow me on this one. Tomorrow is FOMC. Okay, for the last few weeks, most of you have known that I was looking for new all-time highs in the S&Ps going into FOMC. Okay, now this is going off the psychology of the herd. What I'm looking for is that since everyone thinks nothing's going to happen tomorrow, I really think that there'll be a mad rush into equities. Okay. Now, that's for most people, that's trading for one day. Now, I'm looking past that. We also have the end of the month, and then we begin May over the weekend. Okay. So we'll be in that saying of sell in May and go away. So if I was a guy who wanted to get out of some equities over the summer, I would be looking to sell hard into any strength. So what I have going on here is I have TZA. Most of you are probably in TNA, okay, because it had fallen 60-something percent, 68% or whatever, and then I just thought that was a very good deal for a long-term hold. This is more of, first off, is an insurance against it. Okay, so it's a hedge. You're actually going to hedge if you go into this, but this is how I have it set up for right now, okay? We're trading below this, and we're trading on the lows today, okay? Now, this is a long trigger. Put it in at, say, 39, 48, or 47, okay? This would be a trigger to go long. I have the first stopping point at around, we'll say, 41, okay? So, basically, you could have a buy stop up in here, and then just sell it up in here. You can also, I also said, write covered calls or take profits. Now this is the thing, is if on Wednesday and maybe Thursday, Friday, the markets do go screaming, let this thing come to you. Remember, you can always buy some call options on this thing. I believe the 39, 38 and a half is under $1, getting close to 50 cents. So if you want to splash something on your screen, for right now, for 50, 60 bucks, what have you, you can put one call contract on there, okay, and it'd be pretty close to at the money, all right? But this is basically how it's going. I'm first letting the market come to me, okay, as it's falling, but I expect Wednesday FOMC, and that to have everybody go scrambling into equities. They're going to chase this thing into new all-time highs. This would be the ideal a situation, okay, but you want to set a trigger on here for when it comes back through, okay. On here I have, right now we're sitting at, on this daily chart, I have accumulation here at S1 and S2. Once this 38.5 is basically where we're at right now, and then there's 34. Okay, so that's $4 lower. Okay, so that's about 12% or whatever. So it'd be the kind of situation would be like, say, buy 100 shares here, buy 400 shares here, this kind of thing. I don't expect this to continue on much further. It may continue into the following week, early into May, but I expect this thing to find decent amount of institutional sellers. What we need to do to continue to go higher is we need to shake the tree really hard, so we get everybody in chasing after the FOMC. As you can see, the money flow is out of this thing, the unbalanced volume. The RSI is beginning to come back down through on the daily here. On the weekly, most of the your VIX products all have sliced through here. Those also, they're making new lows. It's one of these things that this is more insurance than speculation for right now. On a weekly, the money flow has come out of it. You can see the unbalanced volume, the same thing, and then the RSI. So I said, let the market come to you. The 34.68 is S1 on here. I don't expect to see $24, but if it's a hard press, it'll continue past Tuesday of next week into May. So right now, we're basically letting the market come to you. If you want to splash something on the screen, buy a call that expires this Friday. They're like at 50, 60 bucks, what have you. But let the market come to you. If this thing goes screaming tomorrow, just let the market come to you. And this, like I said, this is more of an insurance hedge than speculation. And look for more trade tips, one a day, at my website. Thank you.